Somewhere out in the world, there's some lucky, savvy investor joyous right now because they are making money so far for the year. But unfortunately, I am not that investor. This is Travis here with another market and trade recap video, and I'm going to start off by looking at the big three as well as the trades I'm in. The big three right now, well, I won't even look at the big three. Yeah, let's look at the big three. Let's go ahead and look at the big three right here. And for practical purposes, I'll just use SPY, DI, and QQQ. Now, SPY, someone asked me recently, it's been a, bad 3 days in the market, or it was a week bad in the market. And then, someone else asked, are we headed to a bear market? I think we're headed to a bear market. And the third person said, I think the market's at a top right now. And, my thought, as a person who's been, a full-time investor for a long time, is we can't be hypersensitive to daily price movement. That's why we use longer, time frame moving averages to determine our trend. That puts our emotions in the back seat and puts our brain in the front seat. We can't make our decisions based on daily price movement. We have to make our decisions based on facts. And the fact is that the 200-day moving average is trending up. We could pull up a 5-year chart here and we see that the 200-day moving average is up. We are in a bull market. Another fact is that for the last 5 years, SPY has gone up in price. Another fact is that, 9-month chart SPY has gone up and it's had this wavy motion. I say it over and over again. Does the stock market go straight up or straight down? 100% of the people who are asked that question will always say, no, it doesn't go straight up or straight down. But why is it when we're in trades or we have our money in the market, we freak out at every wavy motion, and then we forget that the stock market doesn't go up or go down, straight up or straight down? So my perspective is that the last few days price movement is normal ebb and flow of the stock market. What's the difference between this pullback? This pullback is a weak pullback compared to this one that happened here. This pullback that happened back here in September 2013, traded even below the 8 and 23 moving averages here, and, it was coming closer to 200. This one is just a blip, right? So, no, I don't, it's normal ebb and flow. So, from that perspective, no, I don't think the last week was a bad week in the market, just normal ebb and flow. Now, was it a bad week? Now, here's some other perspective. Depends on your perspective. It's a big picture perspective. Short-term perspective, was it a bad week to be a directional trader? Oh, absolutely. Because as a directional trader, you probably lost money buying call options here. Some lucky people probably bought some put options on the pullback here, and made some money. But, for us call options, yeah, bad week for that. For call option trades, oh, for sure. Now, do I think we're headed to a bear market? Nope, we don't. The more I thought about it, the more I put my brain in the front seat. I say, you know what? No, I don't think we're going to head to a bear market, and here's why. Well, first of all, I have that opinion knowing that the stock market doesn't care what I think, right? I am willing to be wrong. I am willing to change that opinion at any moment once the stock market proves me wrong. So I have an opinion, but I'm not married to that opinion. I have that opinion knowing that the stock market doesn't care what I think. But here's my logical reason why I don't think we're in a bear market. Because one, I watch CNBC. Everybody's still skittish and negative for the most part on the economy and the stuff that's going on overseas. People are always saying, well, another bear market is coming because of the euro crisis and all this other stuff that's going on. It's always something, right? Another reason is that because I'm getting emails asking me, are we headed to a bear market? Is this a market top? That alone is how I know we're not headed to a bear market right now. Why? Because bear markets are never predicted by the mass public. It's always taking people by surprise. If we pull up a 10-year chart, now back here in 2007, I wasn't getting emails from people saying, are we headed to a bear market? Is this a market top? Everybody was giving stock tips. Cab drivers, people who have no interest in investing whatsoever, was giving stock tips, and everybody thought they were an investing genius. That's how I know when a bear market is coming, when there's extreme optimism. Same thing happened in real estate. People were buying houses and thought they were going to triple in value in like 2 weeks. Everybody wanted to be in on real estate right before the bubble. Then the bubble hit. The mass public never predicts a bear market. The mass public is never prepared for one. It always catches them by surprise, right? So in 2007, I wasn't getting those frantic emails. People weren't saying, oh, it was a bad week in the market. So based on what I see and hear from people is that people are still skittish and negative on the economy. That alone, I think, is why we're not headed to a bear market. Now, when everybody's optimistic, CNBC is optimistic, everybody's rejoicing new highs, and I have friends coming to me giving stock tips and they aren't investors, that's when I'll get worried. That is when I will prepare for a bear market. But right now, it just looks like normal ebb and flow. And no, I don't think we're at a market top. But you know what? The market doesn't care what I think. So I'm not married to my position. I am willing to be wrong, and I will change that position in a heartbeat. But those are my logical reasons why I don't think we're headed to a bear market. What I see is just a normal pullback to test.